Good morning. Happy Friday. What's up, guys? How we doing? Hope you're all having a good morning here thus far. Business first. As usual, we have some Fed speakers today. 9 o'clock, the Fed's Goolsbee will be speaking. 10:30, this is all Central Time, by the way. We have the Fed's Williams and Waller are speaking. At noon, Central Time, White House press briefing. And at 3 o'clock, Trump is signing some executive orders. Later tonight, we have another Fed speaker, but that'll all be after the fact. So really, for us here as traders today, we're looking at 9 o'clock, maybe some tariff headlines out of Goolsbee. We'll see. 10:30, maybe some tariff headlines out of Williams and or Waller. And then noon, which, we'll probably be off the stream by noon. But White House press briefing at noon. So we probably won't have to worry about that too much on the stream. Just a couple of Fed speakers. Now, again, it's not 2022. In 2022, when, whoever from the Fed would come out and start talking, we usually have to hold off. Because if they say one thing about inflation, the market's flying or dumping. But these days, it's more tariff talk, if anything at all. So we'll see. If they start touching on tariffs, I'll be feeding you guys headlines as is necessary. And if we start hitting on tariffs, I'll probably end up going finger off the trigger. But if we start, going some other direction, then maybe we'll be free to trade as we please, which is kind of what I'm hoping here. Now, market inertia so far here in the last couple of weeks. Volatility, look at those bodies, has died down tremendously. This, of course, is yesterday's New York session bar. Okay, this is just showing the New York session. That's all we really care about for this daily chart, looking for inertia. These bodies have gotten very small, okay, with wicks. What does that tell us? Range, range, range. Obviously, yesterday we had that big bull trend kind of mid, maybe late morning, after the kind of a letdown of US and UK trade deal news. Really wasn't a lot. The funny thing was most of that push, I believe, was kind of on the China news, not even the US and UK at all. But that market inertia tells us, okay, watch out for false breakouts. That's what we need to be aware of here, because we're seeing a lot of small bodies and a lot of wicks on the daily New York session candles. Each candle, of course, represents one New York session. So what does that tell us? Well, bulls are trying to break it out. Bears are whack-a-moling them back down. Same thing with the bears. They try to break it lower. All of a sudden, the bulls wick it back up. So got to be careful trading breakouts. We're looking at channels, and we're looking at continuation either inside of a big wide range, which has been beautiful, maybe some stop hunting, but not necessarily continuation on big undeserved, meaning no news, outsized moves, if that makes sense. All right, that out of the way, we have the opening bell here in about 50 seconds. Good morning, guys. How we doing? Michael, Chris, Dips and Peaks, welcome back. Josh, Tony Lanes, Peter, how we doing? How we doing, guys? Hope you're all doing well this morning. Rick, Keith, welcome back. Christian, how you doing? Old school, what's up? Exploit, good morning. Chris, good morning. Brian, TC, how we doing? Clinton, welcome back. Day Trade Tom. Rich Life, how we doing? All right, we're seeing a bit of a downside move here into the open. Again, any move into the open is going to be about 50-50, whether or not that move sustains after the bell. So I got to tell you, I don't care too much what happens here coming into the open. James, welcome back. Zach, Starbuck, how we doing? Nia, Ken? What's up, guys? There is the bell. Never gets old. All right, let these institutional market orders clear. We'll be good to go here on a Friday. Now, Fridays notoriously are a little bit slower news days. Volatility-wise, that's not necessarily the case, unless it's like a dead market and there's no news on a Friday, which is normal because a lot of companies, it's a little different for the market as a whole. Because if you think about individual companies, when do they tend to release news? Tuesday, Wednesday, Thursday, because they think they're going to get the best result, whereas a lot of people have kind of checked out on Friday. They think the news will get lost in the weekend. Market-wise, that same mentality is kind of there, but volatility-wise, it really only matters if you really need the added volatility, which, right now, the volatility definitely doesn't hurt, but I wouldn't say the market's, dead. It's not big, perfect, smooth volatility, but you know, if you're thinking this is dead, you haven't seen a dead market. We saw a dead market for just a few days, luckily, maybe 6 weeks ago, and it was brutal. Actually, we saw it a few days ago late in the day, too. We had like a 9 ATR. That is brutal. That's a dead market. Gaines, what's up, brother? Welcome back. Hey, I've been trying your concept over the last week, and man, pretty good. I will say the 2-minute is nice, but making sure to check that 5-minute EMA is crucial for information. Yeah, I agree. Anything that other people might be seeing here, like that 20 EMA on the 5-minute, which a lot of people use, simply a self-fulfilling prophecy, nothing more, nothing less, is important, I think, to pay attention to. Maury, good morning. Bricko, how we doing? Good morning. Look at this big wick back downside off the open, huh? Again, institutional stuff. They don't have the same intraday mentality necessarily as we do. They might, but a lot of times they're also not going to, and we'll never know. We'll never know if, you know, 80% of the institutional orders off the open are intraday, or if 95% are looking 3 weeks out. Hey, Lars, welcome back. Good to have you. Simple Trader, appreciate you hanging out. Patel, good morning. Dale, how we doing? Jude, Rita, JM, what's up, guys? Scooby-Doo, welcome. Welcome back, brother. How you doing? All right, well, if you are just joining us here this morning, as far as news today, just a couple of Fed speakers. Again, 9 o'clock and 10:30. We have some Fed speakers. That's Central Time. Noon, White House press briefing. That's really about it. Marshall, higher high, biker pilot. Welcome back, guys. Gibbs rolling in after the opening bell. What's up, brother? Kevin, good morning. Look at this daily chart. I mean, I know we already looked at market inertia, but this is kind of... I don't want to say brutal because we've been trading decently well. Meaning a lot of base hits, which is really what I'm after. Just consistent base hits, ideally. Obviously, you're going to have some red days mixed in. But we've been hitting base hits pretty consistently. But look at this. The last 6 trading days... especially 5, you know, those bodies have just shriveled to nothing. I think there actually might be more movement going on in Globex than net movement. Obviously there's wicks involved, but if you look at just the bull and bear bodies of the last 5 or 6 trading days, 5 especially, there's actually, I would say, more movement going on overnight than in the actual New York session, which is interesting, but there's wicks, okay? So we're talking net movement, not total movement, but the wicks, again, that just reinforces, like, we're in a range market. Expect the other side to question moves. Like, expect the bears to look at this move and say, come on, bulls, really, you know? Let's step in ahead of this little pre-market descending resistance and see what we can do. At least expect them to try. It doesn't mean they're going to succeed. But I think of it kind of like almost like an EMA, like on a 5-minute chart. Everyone sees it. Everyone knows it's there. It's probably going to be at least a little bit of a hang-up, but does it succeed? Let's see. Let's find out. That's how I think about these little range day breakout attempts, where you know the other side's stepping in. You know they're going to see it and step in and be like, I don't know, buy low, sell high market. Sell high, buy back lower market. Christopher, welcome back. Good morning, brother. How you doing? Terry, good morning. By the way, we did get the Fed's Williams speaking at 8:15 Central Time, and they were finished up just before the opening bell. So there is not currently, as far as I know, a Fed speaker currently speaking, which is good. So we can let this institutional kind of chop back and forth clear, let them rebalance their portfolios, and then we can get to work here. Bumble, good morning. How you doing? All right, what are you guys trading today? Are you guys in evals, funded, personal? What's up? Mr. V, good morning. I think it's always interesting to kind of set the stage and understand what you guys are trading, because I trade differently. Similar, but differently. I'm much more aggressive in evals than funded, for example. Mohammed's in an eval, Debo funded and eval, Scooby, all the above, JM still hitting the personal. Simple Trader, eval and personal. Rick, eval and funded, Terry funded, Aaron's in evals today. Lars, 350K, Apex evals, Josh is in personal. Treff, 1 PA and 1 eval left, had a rough last week. Okay. Dust off, get at it. Exposed. It's been a huge week for me, being patient and disciplined. Mr. V, starting my dude TTP eval. Failed yesterday for forgetting to close position by 2 points. I was 400 away from passing. Yeah, well, put in the rear view. Bruce, first day of trading, 1 funded top step account. Cool. Bumble, I blew my funded yesterday. Super disappointed with myself, and I'm still on the sidelines. We'll get on it again soon, though. Get on it today, brother. No time like now. Rich, just got my second payout in the last month yesterday. Cool, good work. They are also my only payout since I started trading in January. Pat, good morning. How are you doing? Aaron, trading funded, in a little bit of drawdown. Oh, I see, Mr. V. Oh, I see. You didn't close by 2 p.m. Pacific. That makes sense. Oh, man, that is brutal. Yeah, you guys, you got to be careful that you're, these rules, like you can't trade past a certain time, like 4 p.m. Central, 2 p.m. Pacific, 5 on the East Coast, whatever. You don't want to fail on a silly rule break like that, but, it happens, move on. All right, we are into 840 territory here, so a couple more 2-minute bars, and we are free and clear to do as we please. What we just talked about, by the way. You see these bears stepping in like, no, pre-market, ascending resistance. It's not enough for me, but I know the bears are going to look at it. And then pull it on back. Say, yeah, we're in a range market. This thing's not trending. We got a bit of a trend yesterday, but this isn't a trend market. Can't be understated. And I think it's brutally understated in the industry how important actually understanding like the current inertia or the current environment of the market is. And it doesn't have to be complicated. I know when I say that, you guys are like, bro, trading's hard enough. Like, now I need to understand the market. No, just understand. You should have a set of like range setups where you think in terms of like, okay, I'm going to trade, this is a range bound market. Buy low, sell high mentality. Sell high, buy lower mentality. And then you should have like a trend and or continuation setup column where you're thinking buy high, sell higher. Sell low, buy back lower. Those are two really different thought processes. And when you start mixing those two, it can get really confusing because it's kind of opposite of each other. But the second you really start to think that way and understand, okay, I'm going to trade a little bit differently based on the market environment. I'm more aggressive on continuation trades in a trend market. I'm less aggressive on the continuation, but maybe I'll hit channels more aggressively. In a range market, that presents channels. We haven't seen a ton of channels lately, but we likely will. Have those two columns. Trend market, range market, it changes the way you think, and I think being able to adjust, you're never going to be completely on one side or the other. You're always going to have kind of a foot in both. You're just leaning a little harder into one. That'll help you a lot. It'll help you a lot. You don't want to, in a big bear trend market, you don't want to be buying bottoms. I mean, come on. If anything, you want to be selling continuation and selling descending resistance in a big bear trend market, for example. It's a simple thing that I think for most people would clean up their trading substantially. Because a lot of people just get bit over and over and over, trying to trade channels in a trend market, trying to trade breakouts in a range market. Not even that clean of breakouts. I mean, right, you gotta understand what's going on in the market. What is everyone thinking? Because that's real. That's not like, we're not reading tarot cards. That's real. Everybody looks at the daily and says, should I really expect a 1,000-point trend today? Probably not. Right? I mean, the probability is just lower of that happening because everybody sees that that's not happening. It's so obvious. It's written in big letters on the wall, and everyone chooses to kind of ignore it. And I don't understand why. I mean, I get it because trading's hard, and there's a lot of things to look at, and everyone's teaching, just trade this one setup and you'll make a bunch of money. You also have to have that discretionary aspect of understanding, well, what the hell's going on in the market? What is everyone looking at? And what's a reasonable expectation for me to think when a big breakout is happening? Are bears going to step in or lay down? You'll never know for sure, but you can have a good probability expectation, right? Lee, good morning. How we doing? Borneo, 2 Apex PAs here today. Jimmy says, I'm contemplating, would it be better to reset a Take Profit Trader Pro funded account that got blown, which is $1,500, or do a Tradeify direct to funded account $450? I haven't tried Tradeify before. Well, I guess the question there is, how much did you take in payouts from Take Profit? I mean, if you took 12,000 from that one Take Profit Trader account, it would probably just make sense to reset it, stick with what you know, and see the ROI, or try to see the ROI again. But if you didn't get to payouts anyway, then it's kind of 50-50. Maybe you should try Tradeify, straight to funded. Peter, what's your view of Apex? And by the way, we just hit 845, so I am now watching to see if we get any kind of setups forming. Let's see if we get something here. Nice little continuation sequence here. Not too big of a bar. We have 38 seconds left until this 2-minute candle closes. We're well within the range that we put in the Globex, by the way. We didn't see a lot of volatility off the open, but I would need to see this 2-minute bar close well below this previous wick. We've already taken out any of those stops. 20 seconds here. And if we get a nice clean close near the low of this bar, which the bulls are trying to wick back up, so we may not see that, but let's see if we do. I'll be ready in case we get a big bear push downside. Roll over in 5 seconds. We're going to close inside. You guys see that? We closed inside of the previous bar's low wick, which shows me that the bulls are seeing that and at least trying to hold it, which I'm not into. So, same idea applies on the next bar here, the next few bars. Let's see what we get. Peter, what's your view on Apex 300K versus 50K or 100K static? Well, My view is if you can pass the 300K, it's a hell of an asset if you're able to, you know, scale ideally horizontally. But it's quite a bit more difficult to pass the 300K eval. So I guess my view on it is if you haven't, I guess here's my honest perspective. If you haven't taken any payouts yet, I would go 50Ks. They're just a lot, they're not easy, but they're a lot easier to pass the eval. They're a lot easier to pass the eval. And once you get into the funded account, it's kind of a similar, yeah, the number is different that you have to get to, but the drawdown is also different. So it's kind of a similar scenario. You just have to cover the drawdown, follow all the rules, and you can start taking payouts. But if you've taken a lot of payouts and you're like ready to, I think the reason to go to 300K is if you've already maxed out all the Apex accounts and you're like taking payouts 1 to 2 times a month per account on average, and it's time to scale to the 300Ks because you can no longer really scale horizontally. You have no option, but to scale just to a bigger set of Apex accounts because you already have 20 50Ks, let's say, then it would make sense to go to the 300s, which is why, by the way, I think that when you first set and start scaling your Apex, I don't think you should necessarily go all 50Ks if you know that you're going to want to get bigger at some point anyway. Maybe start with a few 50Ks, a few 100K statics, so you're a little bit diversified, and then start throwing in 150Ks. They're a little bit easier to pass than the 300s, a little bit harder than the 50Ks. It's a healthy step up is the 150s. And then you can go 250s or 300s. But I think if you've never taken a payout and you're like, and you don't really have an edge and you're trying to get the 300Ks, I think you're probably going to be wasting a lot of money on evals when you could probably see a lot more success quicker just going with 50Ks. That's my thought process there. All right, still watching this here, kind of trading within this range here. A continuation kind of got shot in the foot after we closed inside of that previous wick low. Bruce, good morning. Brandon, good morning. Welcome back. Triple M, first time watching the stream. Do you trade multiple firms on one trade copier? Thanks. Yeah, I do. I trade Apex PAs and Take Profit Pros all on this one copier. Which, by the way, is the copier from Affordable Indicators. And no, I don't have a code or anything. I just like it. But I do have code BIG. Best deal always, baby. Apex and Take Profit Trader. Peter, thanks. I have a 300K and took a $3,500 payout last week. Beautiful. Beautiful. Yeah, Peter, if you've taken a max payout on the 300Ks already, then I'd also, you know, I'd be curious, like if I was working with you one-on-one or something, I'd be curious, well, what's your pass rate on the 300K evals? Okay, because if you know, someone might come and say, well, I took a $3,500 payout from a 300K account, but it took me 40 evals to pass one. It's like, well, the numbers, how are the numbers working here? But if you know, if it only took you a reasonable amount of evals to pass that and get that, then yeah, look to scale to 20 300Ks. Beautiful. All right, let's see if we start forming a little channel here. Still kind of in the early days of this development on this little move here. But we're never more than really 2 candles away from putting a trade on, even when it looks like there's nothing on the table. Jimmy, scale horizontally. What do you mean by scale horizontally? Is that copy trading or position size? What I mean is, I'll speak literally. Obviously, this is a spectrum. What I mean is, rather than getting one Apex account and trading 5 minis, which, you know, you lose 2 trades in a row and you're done. Rather than doing that, to get to the same potential P&L with a higher potential probability of doing so, you should trade a lot smaller per account, extend the average life of each account, and just scale to a bunch more accounts, which means copy trade a bunch of accounts, rather than trading like 1 or 2 funded accounts just really big. You can get to the same result with less per account risk, But oh, your expenses go up. Yeah, but the evals, they're so inexpensive compared to the payouts you're taking if you have an edge at some point that it just doesn't matter. The business model just works. Whereas scaling vertically, a lot of times that business model, it's not going to work because you'll face some regularly scheduled statistical drawdown and you're blowing accounts every other day. What's up? Good morning. How we doing? Evo. Doesn't matter what mine is. It's been very good lately, I'll say that. Yours is going to be different because you and I are different people. You guys see a lot of my trades are discretionary calls. So my personal business, first of all, is my personal business. And second of all, your win rate is going to be entirely different because a lot of this is discretionary calls. You guys see. Okay, look at this push. But you guys see on the stream, I'm making a lot of discretionary calls. Some of you guys might put those trades on and win, and I might not take the trade. Or I might put a trade on that you don't put on and I'll lose, and you didn't put it on. Or you'll put one on and lose. You know, it's just... track your own data. It doesn't matter what anyone else's data is. It really doesn't. Now you can get ideas of setups. That's a great idea. If you like one of my setups and you're like, that looks like a good setup, then you should steal my idea. I do not care. I really don't. But you got to track your data and find out, well, what's my win rate? Because you're going to make different calls than I am. Andy, good morning. No, I'm kidding with you, Evo. I know. All right, this is a big outsized bear bar. So, you know, the bulls are probably going to wick this back. Again, it's a little disappointing, I got to tell you, to say that a big outsized bear bar is 30 points. So that ATR currently is about 18. And we are 10 2-minute bars into the open. So the average range today is very, very low. So listen, we may have to end up leaning into negative reward to risk. Okay, which I'm not against doing. I'm totally open to. We'll just see what the market gives us here. I'm keeping an eye, by the way, on we're seeing maybe a little descending support. I'm not a fan of buying descending support. I'd much rather sell descending resistance and vice versa. Buy ascending support and not sell ascending resistance. But if we get continuation, I'm open to that too. But you guys see, something I'm noticing here this morning already is we're seeing a lot of variance in bar size, which is very typical of a low volatility market. You'll get a 10 range bar, and then all of a sudden you'll get a 30 range bar, and it makes it a little more difficult to trade, but it doesn't mean it's time to walk away. It means it's time to just make the best decisions you can and put them on and accept the outcome. Again, listen, guys, the whole business model here is develop an edge that you can show to yourself. Hey, when I make these decisions, guess what? I have an edge on average. That's all the confidence you'll ever need in the world, to look at numbers that prove to you that, hey, like, you can do this. It's working. You're not only covering slippage and commissions, you are making money. And then show up every day and put the best trade or trades you can on, accept the outcome. The casino knows they have an edge. Do they not show up to work some days because they're like, well, I don't really feel like taking a loss today? Nope. They open for business every single day, and they deal as many hands as they can, and they go home. If some whale comes in, you guys see that? Like a delay, the market like wasn't moving. Some whale comes in and pulls out millions of dollars in one night. We good on the stream? Let me know if we're good, guys, in the chat. I think we're good. All right, cool. Thanks, guys. All good. Yeah, some weird glitch for a second. If some whale comes into a casino and pulls out millions of dollars in one night and the casino looks at their books and they're like, damn, we lost some money today. They show up tomorrow, right? They come back tomorrow and they make money. And eventually at the end of the month or the end of the quarter, almost every time, they're going to be deep in the green. That's what we're doing. Some days, you know, someday down the line, it sucks, but you're going to come in, you're going to enter a trade. Boom, Trump's going to post a post on True Social. The market's going to slip you 30 points and you're going to be like, holy shit, what just happened? But if you still have an edge, you come back the next day, just like the casino does when the whale comes and hits them for millions. It's just the business. And I don't know about you, but I'd love to own a few casinos. Those things print money. All right, so we are finally developing here a potential little descending resistance, which is good. We'll see if we can keep rejecting that, or if we end up going bull continuation, I'm cool with that too. Whatever setup we get, I will slap on. We got very close to putting on a setup here, but we got a wick back up inside. So not putting that on obviously ended up being the right call. Zach says, my data shows edge. I just have to overcome taking my trades off early. Literally the hardest thing I've ever done. Yes, trading is one of, I mean, I don't want to say that anything business related is like the hardest thing you'll ever do, because who am I to know what you've been through? But as far as professionally, trading, and even a lot personally, trading is one of the most demanding and difficult emotionally, arguably physically, in a lot of ways, just showing up every day and putting yourself through this. Sometimes when you go through drawdown, that you have a physical response, because this is a very hard thing to do. You're fighting your lizard brain. There have been countless studies done on what's the reaction like when people lose money. Okay, there's 65 seconds left on this bar. Let's see. A little bit of a weird setup here. Let's watch. What's the reaction when people lose money in their brain and it hits the lizard part of your brain that is the most difficult to control? And we are fighting that every day. You're fighting your DNA, you're fighting everything inside of you. And it's hard. It's very hard. The only way to overcome that, I think, is to have undeniable proof that you are who you say you are, which means gather data. Even if it's just a week or two. Even just that little bit of traction is enough to get the confidence necessary to keep pulling away. But you gotta have something, because if you're sitting here completely naked with no data and no proof that you can do this at all, it's really, really hard. But you're gonna have to fake it for a week or two to get some data and trade small. You get the data, you look at it, you say, okay, I have an inch of traction now, look at this. This data looks pretty damn good. I traded well last week. I did what people said couldn't be done. And then it's off to the races. All right, big wick back there on that bull push. If the ATR is around 20, is that usually the one-to-one you look for, or are you looking bigger? Let me think. If the ATR is 20, is that the one-to-one I look for? I understand what you're saying. At 20, I will leave it at, well, either going out automatically as 30-30, but right now I'm going to leave it as 40-40, and if necessary, if that ATR doesn't creep up, I'll just lean hard into negative reward to risk, like 1 to 2 reward to risk, somewhere around there. Because when volatility is low, most of the time, not always, but most of the time, you're going to be trading in kind of a trading range. So that equilibrium point acts a lot like a magnet, even more so than average when volatility starts to get kind of crushed. Breakouts become less and less probable, which means for me, maybe this doesn't make sense to you, but in my brain, it makes all the sense in the world to lean harder and harder into negative reward to risk, the lower the volatility gets. Okay. All right, so let's see how we get on this close. I am watching here. We're still within that range, so let's see. Ooh, I don't like that wick at all. Oh, goodness, that is... goodness. That went from a clean... Now, this is why you got to be able to think quickly. Now, obviously, that doesn't seem like that big of a deal, but a lot of people will struggle with that. You know, maybe you guys don't, but... That looked like we were going to get a beauty of a close, right? Maybe around 65 plus. In the last 3 seconds, 5 seconds, we pulled way... That was nasty. That was a disgusting close on that bar. We can't put that on. Bears step in immediately. All right, now this bar is of a lot of interest to me, and I gotta tell you, we have 50 seconds left on this 2-minute bar. A good clean rollover here. And then a nice clean close. Right? Well, honestly, I don't really care where, but I would prefer, I mean, I guess I care. A nice close like here on the next bar. Clean. At or very near the high of that bar. The next bar, that is, right? Not this one. And then I could stop hunt this little high. That'd be a beauty. All right, here comes the rollover. A few seconds out. Right, there it is. Now let's see if we can get about a maybe an 18, 20 point bar. It would have to be to the upside. So these bears are stepping in though. God, look at these wicks. These wicks are wild today. Low ATR, still below 20 here on the average range of a 2-minute bar. Pop says Tesla's going nuts. Yeah, it is. Tesla is moving. Made a big push in the last couple of weeks. So, you know, I get this question a lot. If a big name, let's say that like a big name that's weighted heavily, or at least considered heavily in like the Nasdaq, is moving big, upside or downside, should you trade based on that? Now, you can if you figure out a way to have edge doing that. The numbers are more important than what I say, right? Numbers are more important than what anyone says. If someone says no, that's a shitty way to trade, but you're like, but I have edge. I don't know. Go with the numbers every time. But like I would consider, yeah, Tesla's making a push. I would consider it, but at the end of the day, the Nasdaq is the big dog. And I think you can get in your head a little bit. Well, yeah, but this name's moving. Why is the Nasdaq, like, Tesla keeps pushing the there's no way the Nasdaq pulls back. I would just focus on the Nasdaq. Maybe understand the context of what's going on outside of that, or inside of that, I guess. But I think it's more a waste of mental capital to focus too much, and it's probably going to confuse you to a point that's not worth it, if that makes sense. Trev, if Tesla, Apple, Microsoft, Nvidia, and XLK are all down, I would think we might be negative. Well, you would think so, yeah. But you can also kind of get to that. You could figure that out just by looking at the Nasdaq, you know what I mean? Which is simpler. I like to keep things as simple as possible. Trading's complicated enough. You guys notice this today? I'm seeing this across my my data providers, Thinkorswim and Ninja. So I don't think it's a data issue, but I'm seeing the volatility is starting to creep up a little bit. It's at 22 now, but what I'm seeing is like we'll get these little regions where it's not really moving. It'll stick to a point for multiple seconds, which is kind of uncommon. Almost looks like London session, or not quite Asia session, but China's commerce minister says decision on U.S. trade talks is based on full assessment. So, I mean, we've seen this so many times. It's a good learning point, actually. Let's look at the 2-minute chart. A lot of people like to trade. I've been seeing this all over the place. A lot of people like to trade the 15-minute opening range, and they'll trade the breakout of it in any market. Now, let's think about what's going on there. So this is the 15-minute opening range from here to here, right? You would have entered short here. Now, maybe you caught a little scalp. I think a lot of people would have left that on for more than, 13 points. So they probably got stopped out. You know what that's completely ignoring? When you just take that every day. Now listen, if it's working, keep trading it. if you're like, but Wrench, my data looks better than yours, keep trading it. 100%. Do what the data says. But let's think about this for a second. Look. What kind of market are we in? Look at these wicks. This is a range market. Does it really make sense to try to bet on huge continuation every day, regardless of what the candles are doing, just because it broke out of the 15-minute opening range? Does that make sense? Especially for bigger moves. For smaller moves, it does maybe make sense. But for big moves, like 50, 100-point moves, I would argue I don't think that makes a lot of sense. Because look at what the market's been doing. Look at what the inertia is. It's very small bodies. And larger wicks, which tells us a lot of reversal. sequences succeeding has been happening. All right, so we're seeing the 20 EMA on the 2-minute and on the 5-minute kind of line up here. Pretty close. Now, again, I don't really care too much about the one on the 2-minute, which is what you're looking at. But on the 5-minute chart, which is here, I only care because I know that other people care. The only reason I care at all. Self-fulfilling prophecy here on the 5-minute. We are trying to hold that up. Right, we're 10 seconds out here from the rollover of this 2-minute bar. And it's shrinking with a lot of wicks. Now, if this bar had ended up growing and pushing down and closing it like here, I would sell that rollover because that gives us a lot of room before any real legitimate bear argument. But the bull's wicking that back up. Jeremiah, are we clear of any news today? So the Fed's Goolsby started speaking at 9 Central. Or at least that was the scheduled start time. I haven't seen any headlines come through, though. And then at 10:30, we have the Fed's Williams and Waller both speaking. At noon is a White House press briefing. That's about it. Yeah, Panther, a whole bunch of Fed speakers. A lot of them already spoke. All right. Yeah, I appreciate you guys letting me know in the chat, but that bar was very, very outsized. Unfortunately, but same idea does apply here, though I gotta tell you, I'm watching that descending support because I know the bears, I know the bulls are also watching that area. They're gonna try to hold that up. Now, ideally, they won't be able to, and we'll get clear break that we can short with a nice continuation setup. We'll see. All right, nice downside push. Now, I would want to see a nice clean close here, not too outsized, and then a rollover, and boom, a nice clean close, because realistically here, if we look at this 2-minute chart, not only did we have this doji here, which can kind of cause a problem, but I know that bulls are watching this region. Okay, now just don't overthink the line, but any close here is right at this level. The only thing left for the bulls to be like, that gives me confidence. Now, the break-even point on the day is also something to consider. 20,000 is far enough away to not worry about yet. The break-even point has been an issue for the past, month. So here comes the rollover, 5 seconds out. Tubed out, welcome. How we doing? All right, nice little downside push. Let's see if we can get a nice clean close. Ideally, a similar sized bear bar to that previous bar. Let's see if we can get that. And a nice clean close at or very near the low of the bar. This bar, that is. Got about 1 minute and 17 seconds to clean that up. See if the bears can give us a push. Now, as far as, well, what about stop hunting? Yeah, there's nothing great to help us out with a little stop hunting. There's this down here. But there's also that break-even point kind of right ahead, which I'm not in love with, but it's still far enough away. We would only really have to deal with that, maybe 25, 30 points in the money, which I'm cool with that. I wouldn't want to enter 5 points away from break even because I know that the market tends to at least show a little hesitation. But we've got 40 seconds until the rollover here. And this is what I wouldn't want to see. The bulls wicking it back upside, seeing that little descending support and kind of taking it to heart. I want the bulls to just lay down, give us a nice low close. All right. Let's get armed up. Here's the 5-minute and the 2-minute look. Few seconds out. I need to see a nice low close. Come on, bears. Give us a nice push. I don't like that wick. Nah, that's a bit too much of a wick. Shrinking bear bar. I can't put that on. I want to put that on, I'll be honest with you, but I can't. It'd be a rule break. So, at the end of the day, it's like, if I have to break a rule to put it on, that side of me that wants to put it on gets trumped by the side that's like, I can't break rules. If I break a rule and make money, I feel worse. Because I know that it's not sustainable, at least for me, the way that I trade. Nice push though. So same idea does apply here on this push. All right, minute 15 out here. Kind of an outsized bar. All right, we're coming into that pre-market low. We got 55 seconds. The range on that last bar was 15 points. Now, this is what we were talking about earlier. The range here is 35 points. Okay, which is not 100, right? Which is we're outside. Oh man, it keeps growing. That's not it. That's, I don't want to see that. This bar becoming more and more and more outsized, pushing through that pre-market low now. This is now an outsized bar to the point where I can't put that on anymore. See those bulls step in at the very last second, wick it back up 20 points, 15, 20 points quickly within a few seconds. That's the problem you end up with those big outsized bars. It's that rubber band snapback. Now that took us through the break-even point on the day, so I expect, at least I wouldn't be surprised if we saw a little bit of a hang up here at break-even. But if the bulls just if the bears just keep pushing us lower, then I'm cool with it. Got to trade what's in front of you, right? So same idea for me applies here at a minute 20 out from the rollover. We're less than 0.2% in the red. So as far as this going against that range day mentality, I'm cool with it at this point. Now if this went, you know, 300 points further in the red, I'd start making a discretionary decision, like thinking, okay, well, bulls are going to at least try here soon. Which, you know, they're already going to be trying here. But the close of this bar tells me a story. And I want to hear the full story before I enter, which means I got to wait 40 seconds for this bar to close. All right, we've got 15 seconds here. You can see bulls stepping in, wicking this back up, trying. So here's the rest of the story playing out. Yeah, you see that bulls wicking this back up. There is the rollover now. So that's a bull attempt. They're trying to create a reversal sequence. Which is the concern when you get big pushes like that, which again is part of the reason why I have to wait for the bar to close. Now again, the rollover close is somewhat arbitrary, but also kind of not, because it's also the rollover on the 1 minute bar. Every 2 minute rollover is going to be a 1 minute rollover, right? But yeah, as far as time-based charts, it's kind of an arbitrary way to measure the information at a specific point, but so is every chart. I mean, a tick chart, kind of arbitrary as well. So let's see if the bulls can succeed here. They're pulling on back to that break-even point, trying to create a reversal sequence, but they're going to run into break-even. Let's see if the bears can defend break-even. All right, that 20 EMA on the 5-minute is way up around 20,220. So let's see if the bulls end up putting together a little reversal sequence that turns into a continuation sequence. For reversal, I need to see at least 3 consecutive bars. Growing bodies, ideally. And on the entry bar, it needs to be a close at or very near the high. Clear of any previous bar wicks. But still in the early days of this reversal attempt. So we'll see if the bulls can even put that together for me. All right, bear's gonna try to take out that little low. Good, this is starting to kind of size up to be a decent setup. When you see these big pushes, a little bit of relief, and then if the bears are able to retake the low and then roll over and give me another push with a close near the low, the very common way that the setup ends up looking. If you don't get a setup on this big first push, then you get that little relief bounce, but the bulls try, the bears let the bulls try, and then they do it again. In that case, I only need 2 consecutive bars for it to be a good setup for me. Because we're still in a big bear trend. I don't mean to say it's a trend day, it's not, right? But we're seeing a short-term bear trend, which allows me to take a setup on 2 consecutive bars rather than needing 3 like I would in a reversal attempt. All right, we've got a minute 50 left on this 2-minute bar. Let's see if we get a nice low close. Similar size body. Closing near the bottom. Give us something here. All right, we have got 40 seconds out. What's up, Bigfoot? Welcome. Good morning. $30 seconds. Want to see this bar grow a little bit. Not too much. Just a little bit more. And I will get ready here. 15 seconds to clean this up. Getting a little bit of a wick back. Come on, Bears. Take us lower. Close at or very near the low of this bar. A little bit of a push downside, Bears. Come on. There we go. Now roll over. There. And I will sell. So I am now sitting short. All right. Average price, $20,079. Stop up at $20,119. Take profit down to $20,039. We will see if we need to do any early management, though ATR is up near 28-ish at this point, which is fine. 7-8 points in the money as we currently sit. We are clear of the break-even point on the Nasdaq, and this setup would take us off at about 20,039 if we let it go to full target, which is again clear of 20,000. So we're kind of right in that slot between the break-even and 20,000 point. So I'm good. I'm happy with that setup. Now it's time to just let it work, accept the outcome. We are 16 points in the money. $20 points in the money. Back to break even on the trade on that little wick back upside here. All right, that's a doji. Okay, so the bulls they're trying a little reversal sequence, still the very early stages of doing so. We'll see if the bulls can succeed in doing so if the bears just end up slapping this lower. Bears are trying to take it lower here, back to 15 points in the green. All right, bulls trying to bounce this now. A couple points in the red. You can see this is very, very similar to that earlier bounce we saw. Bulls are going to attempt a little reversal sequence here. Now it's just a matter of, can the bears hold them off and keep taking us lower? Break even on the trade, essentially. A couple points in the red. It targets down at 20,039. Let's see if we can get a push. There's a real argument going on here around that, about 5 points in the green, but a real argument here going on around this little region with the bulls trying to create that reversal. Not a super clean close out of the bulls, to be honest with you. Come on, bears, take us lower. All right, about 11 points, 12 points in the red, 15 points in the red. Bulls trying to test 20,100. That's a tier 3 level. Oh yeah, the Bulls are taking this baby higher. 30 points in the red now. Stop at 20,119. See if the Bears step in and make this a bit of a mushy bounce and fix this up for us. Well, back to break even on the trade. Back in the green here. Couple points. Yeah, for now the plan is to let this one work. Volatility, that ATR is it's good. It's at 29, it's at almost 30. So I really don't have much reason to manage this guy early. Again, at best on this trade so far, we were a little over 20 points in the green. All right, we are getting close to the stop. That stops at 20,119. Still a great setup for me. I'm glad I put that on. Let's see if we get stopped. About 30 points in the red here. Well, Bears are trying to hold them off. 25 points in the red. Those Bulls take it up through 20,120, then we're going to get stopped here. Which is fine, by the way. And still, I mean, that was it like textbook setup? No, but very few are going to be. That was a beautiful setup, though. I'm happy I put that on. Just didn't really get too much follow through. Let's see if we do get stopped again. Still in the trade. Stop is up at 20,119. Bears are trying to hold them off here. It's a relatively clean close out of the Bulls. They're cleaning this up. Well, we got within 1 point, maybe? Let me look. We got within about 1 point of getting stopped, and now we're pulling back a little bit. Still a high probability that we get stopped, by the way. We are still in the trade. We're hanging out right above 20,001. Well, back to about 22 points in the red. Look at how close we got. I mean, look at this. That's the look. Really was a good setup that I put on. Probability as we sit right now is not necessarily in our favor. We got very close. That's nuts. That happens, by the way, to the take profit side. Discipline. You had an idea, you put it on with thought out, pre-thought out levels, let it work. All right, here's a push out of the bulls. Again, stop at 119. See if we get hit out here. And that will stop us out, and we are flat, so we are down 1R. All right, let's see what else we can grab here. Move on. All right, 1 sec. All right, we are back. Okay, now let's see if the Bears end up turning this into a little descending channel or if the Bulls actually can put something back together here. Okay, now, as far as news, we're pretty clear here for the next 39 minutes. Again, at 10:30 Central, the Fed's Williams and Waller will be speaking. That's about it. And then again, noon, White House press briefing. All right, now that 20 EMA, I'm not really concerned about it on the 2 minute, not on the 5 balls. On the 5 minute, that's way up at 20,181, which is about 50 points away. So if we do end up seeing bull continuation, I'm thinking about this break-even point on the Nasdaq, which tends to cause a little bit of hang-ups. If we can get free and clear of that, then I'm thinking about this 5 minute 20 EMA, as long as it's not in the way in, I would say, the first half to 3/4 of a trade, I'd be cool with that. But we'll have to kind of thread the needle here for me to get a setup to the bull side. We'll see if we do. Coming into the break-even point on the day, 5 points out, 10 points out. All right, now this bar here is important to me. We get a nice growing bull bar closing at or near the high, then that would be a clean setup that I would have to put on. But again, we'd have to be threading the needle. So let's see if we get that. right, we have 50 seconds left on this 2-minute bar. Bear's trying to pull that back in. All right. Now, this bar, this puts us in an interesting scenario because this bar is very important to me. If it ends up being a small bar, I will wait for the rollover. However, since we're in an overarching bear move to the downside with this little bull attempt push, I would not be completely against taking a 2 consecutive bear bar continuation trade if I also had the idea of stop hunting on my side. So for example, if we got a big push downside on this bar to like here, and I could stop hunt these lows, I would put that on. But if this ends up being a doji or like a small red bar, I'd have to wait to see how the next bar develops, or green bar, of course. So we'll see what we get there. Small little bull bar, nothing there for me, except for the fact that we may end up seeing a little ascending channel forming. That sets that in. We'll see if we can get one of these, ideas forming. Bull side continuation, cool, I'd put it on if it was clean. Bear side continuation, great. If I can hunt stops on it, even better. Ascending channel support with clean, strong bounces away, great. Just need to see one of them form, whichever comes first, I do not care. Hey Michael, this is gonna sound like the most cliche thing you've ever heard, but I don't think anyone actually says this, even though it sounds cliche. I feel like it's underrepresented. Here's the reality. If you are struggling to get to payouts, if you're struggling to trade because it's too much about the money, you're trading too big. You care too much. Trade so small that you don't care and you just fall in love with being good at trading. Listen, here's tough love, guys. Here's the reality. If you don't like trading, you're not going to make money at trading. If you're like, I hate sitting down every morning and trying to figure out this puzzle, this sucks, but oh, maybe I can make a lot of money. Trading is too hard for that to work. You're going to hate it. And even if you end up making like a couple $1,000 a month, like, is it really worth hating your life every morning to sit down and try to figure this puzzle out? Now, I know that most of you guys sit down every morning, you're like, I cannot wait to start trading. I love trading. And you have to have that. However, there's a difference between loving trading and really liking to gamble and just using trading to gamble. There's a big difference between those two. All right, we got a minute left on this bar now. Potential ascending resistance that bears are going to look at, but there's room. Okay, so if we can get a nice, clean, mid-sized bull bar, kind of similar to this size bull bar, closing at or very near its high, I would think about putting that on. However, I need to consider this. You know, it's obvious, but it's also not as clean as this downside level, because you got a clean pull away and then pull back, whereas on this level, it's just kind of tapping. Let's see if the bulls can even push this higher to begin with. All right, here's the rollover. Nothing there on that bar. Let's see how this next bar develops. Yeah, I'm looking to see. Continuation would be nice. However, we have that little ascending resistance to deal with that the bears are going to be watching and getting all cocky about because it's going against them. But I'm also watching that little ascending support level. I mean, I have to draw it a little less aggressive here. 50 seconds out until the close of this 2-minute bar. This is how I currently have it drawn. I mean, you could obviously draw it like this. I don't like to draw levels so aggressive. They just don't hold very well. But even this isn't the cleanest. That's not the cleanest line. I mean, I would prefer to see another test, just to make it more obvious to everybody else. Which is the only reason they work, because other people see it. Now, also worth mentioning, we are very close to the break-even point on the day. We're about 5 points away from being break-even here on the Nasdaq, and we are below the break-even point. So, right around here is the break-even point. Tends to cause a little bit of hang-ups. Let's see how the market reacts. I just want to get free and clear of the break-even point, to be honest with you. Yeah, I mean, really here. This channel staying tight is just about the worst thing that could happen right now. What I would love to see is this baby widen out. Because if you widen out, you open up many opportunities. Not only do you get stronger bounces off of what might be a little ascending support here, but you also get more opportunity for continuation setups before you run into this. You get more room on pullback entries to a potential trend line if it ends up putting itself in to actually hit target before you run into the top. Channels widening out are almost never a bad thing. When they're tight like this, it can cause some issues. All right, we've got 65 seconds here until the close of this 2 minute. You know, it's a bit of a tough read. This little ascending resistance, there's not a really clear way to draw it. People could draw it a variety of ways, and the bears are going to step in just when it gets into, I think, like this region anyway. Not only because of that, but don't forget the 20 EMA on the 5. Right, I mean, everyone's seeing that, so... I'm in a little bit of a weird zone. You know, kind of just clearing that break-even point, coming into the 20 on the 5. This has some cleaning up to do. So I'll tell you what, I'll be back in a couple of minutes. Don't go anywhere. All right. All right. Things kind of still developing here. We're getting the channel widening out, which is good. That's what we wanted to see. All right, so now what I'm really... Let's go ahead and extend this. I know that some people, we might as well draw, right? Are going to be looking at this. Arguably that. I prefer to draw them less dramatic. But looking at this, though, understand the more aggressive you draw any kind of trend line, in my experience, usually, unless it's extremely obvious, usually if you have multiple options, the least aggressive one, without it being flat, okay, or very close to flat, the least aggressive one is usually the highest probability. The Nasdaq, pay attention, is break even on the day. All right, so this throws kind of a monkey wrench into things. I'll let this thing develop here. I'd love to see one more test here of that trend line. And see a nice clean bounce to really set it in stone and get more eyeballs on it. Because right now, the way I have that drawn, there's only going to be so many people that are kind of watching it that way. You want it to be undeniably obvious so that both sides see it and can't really deny. Now you look at the 5-minute chart, we're also in between that 20 EMA on the 5 with the trend line, so worth paying attention to there. But we are now getting doji after doji. ATR is still sitting above 20, which is good to see, obviously. But, you know, it's all relative. I'd love if that ATR was 35, but... All right, Fed's Bostic. Headline here, 2025 economy to be less resilient than earlier expected. Man, with these Fed speakers, it's always negativity, negativity, negativity. All right, number one focus right now is this. That 20 on the 5. Bears are trying to defend that. Bulls are trying to retest it and crack it through. Now, obviously, what I'm looking at really here is potential for continuation upside if there's room before any kind of argument of an ascending resistance, but not right ahead of a psychological level like a 20 on the 5. So, paying attention to all that. If we can get a nice setup here lining up properly, I'll slap it on. Mitts, why does it seem easier to short than to go long? Okay, now a little bit of this is a fallacy, but there is also some reality to this. Now, the reality to this is that on average, well, let's say this to start. When does the VIX skyrocket? In down moves, typically, right? Much more than in up moves on average. Why is that? Because down moves tend to be more aggressive than up moves. The old saying, elevator up, I'm sorry, stairs up, elevator down. Yeah, bulls take the stairs, bears take the window, that kind of thing. There's more emotions at play in down moves. So oftentimes you might find that your average short trade might be a few seconds, maybe a minute shorter than your average long. Which really is interesting. Now, as a scalper, if your average trade is like 3 minutes long, you might not notice that big of a variation. In fact, if it's rounding to the nearest minute, it might be the same on longs and shorts on average. But the shorter you go, the less relevant that mentality is as far as average trade duration, but there is some reality to that. Okay, so here we are coming into a test of that trend line here. Take a look here. However, that 20 EMA on the 5 is still just about 20 points away. Makes it kind of a tall order. At the break-even point on the day for the Nasdaq right now, 0%. It's a little bit of a weird spot. A lot going on. All right, there's a hard test of that potential trend line. Again, that's trend line on the top right is not set in stone yet. This would be about the third touch point. We'll see if that really turns into something more, a little more real. I gotta be honest with you, my ideal scenario right now is a close right here of this bar in the next 30 seconds, a nice rollover, and a push downside with a close at the low. That would be a nice, clean bear continuation, and I could stop hunt the low of day. Really, that would be my ideal scenario. It would increase volatility a little bit and give me something quicker to work with. All right, we got to close on that last bar pretty much at the trend line. Now look here. We talked about this earlier in the week. When you see that close on that last bar at the test of the trend line, and then you get the rollover with an ascending trend line, what you get on the rollover is you go from being above the trend line to below. And even if the trend line is more obvious than this one, it tends to kind of confuse everybody to the point where I think it erases a lot of the edge. Maybe not all the edge, but it erases a big chunk of it, which is why I don't put those on for channel scalps. But if we can get a nice clean downside push and close with a growing bear body, that'll be a trade for me. Because that puts us clear of pretty much everything. 20K wouldn't be an issue. Break even on the day wouldn't be an issue. The trend line would no longer be an issue. And maybe if we get lucky on the close, we could even stop hunt these levels down here. Maybe not. That's maybe a little too far away. All right, 35 seconds here until the close of this 2-minute bar. Let's see if we can get a nice low close going on. Currently, we're seeing a bit of a wick. This is not what I want quite yet. I need to see a push downside out of the bears. "15 seconds. I will get ready in case we see that. All right, bears, come on. Give me a nice push. 8 seconds. They're holding inside of that previous bar wick low. Bears, show some backbone. Nothing. Nothing. Same idea applies here on this bar now. 1:50 out. You see what I'm looking at, right? That last bar, the body closed inside of the previous bar wick. Can't do it. Nothing there. But same idea applies here on this bar. All right, 1:10 seconds out. Come on, bears. Don't let the bulls push you around like this. Bulls are taking us higher. 40 seconds. Till the close of this bar here. All right, 25 seconds out. Not quite there yet, but bears, let's take this a little lower here. Don't wick back into a doji now. Come on. 10 seconds. There we go. There we go. Now hold it. Hold it. Bears, hold it. Oh, come on. Nothing. There's the rollover. They turn it back into a doji. Those buyers are relentless, and the bears have zero backbone here today. That's too bad. That would have been a nice setup here for me. But it's not out the window. It's not out the window. We're just a couple of bars out from kind of repeating that setup for me. So really what we should do here is let's get things cleaned up. We don't need that too much anymore. Yeah, Chris, you're looking at this. I mean, if we were to even draw this, I'd probably be looking about like that, which I'm already subconsciously looking at, but we might as well throw it up there. If we can get a nice little, a bit of a stronger push, because, I mean, a little bit of a stronger push, because it's a bit of an aggressive trend line, and then a nice retest. I would also be open to that. Though, kind of had that in mind. But we might as well throw it up there. The tough part of that trend line, though, is that you run into the break-even point on the Nasdaq issue, so there's a lot of moving parts here. We have to think about kind of all of them at once. Because right now we're 17 points away from break-even on the Nasdaq on the day, meaning 0% for the Nasdaq. So we kind of got to keep an eye on that. With each bar rollover, the potential touch point of that trend line moves. It shifts downside, which makes our job a little bit easier. And we're kind of getting to that point here, which is good. All right, 10:30. 1 minute. We've got Feds Williams and Waller speaking. BP says news. Are you talking about the Fed speakers, BP, or are you talking about a headline? Yeah, Fed speakers. Williams and Waller are speaking at 10:30. Again, in 2025, Fed speakers they're just less relevant than they were in 2022. But we still have to keep an eye out for random tariff news. But I don't think I can let that alone stop me here. So we get a good setup. We'll put it on. ATR here is sitting at about 23, so it's not too bad. It's not great. Again, my ideal range for ATR is going to be somewhere between like 25 and 70. But 23 is when I start kind of thinking about negative reward to risk. If we need to. But the more this develops, the more I'm thinking about this trend line as well. Taking a little short off of a back test. Because that now keeps us below the break-even point on the Nasdaq on the day. Which is good. Headline here. Fed's Waller does not comment on economic outlook or monetary policy in remarks prepared for delivery at the economics conference. All right, so I'm going to keep an eye out here for random headlines if we get some. But I'm not necessarily just holding off completely because of that. All right, now, it's getting a lot cleaner. It's getting more and more obvious to everybody. This puts us below the break-even point on the day for the Nasdaq, so we don't have to deal with that on the trade. Yeah, a nice, clean, controlled retest, and I would put that on short. Let's see if we can get that. Nope, we're sitting flat right now. No trade on as of right now, but we may end up putting one on here shortly. If this sets up properly. Alright, here comes the bar rollover. Good, this bar is a little more controlled, which tells me the bears are kind of sticking around still. Alright, let's see here. Looking for kind of a retest of 36-ish. I'll slap on a little channel scalp short if we get that. There we are, and I'm sitting short. Average price, 20,137. Stop up at 20,177. Take profit down to 20,097. Let's see if the bears can kind of defend that level here. Good little setup for me, gotta put that on. Like 2 points in the red, basically break even on the trade. Bull's trying to take us through that level. A bit of a push through. All right, Bulls taking this a bit higher. Sitting about 12 points in the red as we currently sit. Now, again, as far as early management, I manage early if we get a very obvious like continuation setup in the direction opposite of where I currently sit. That my criteria is the only reason I would stop myself out early is if a setup forms that I would enter if I were flat in the opposite way of the way I'm currently sitting. Then I manage early. But other than that, it's just a matter of making the best decision I can in the moment and then letting the thing work. All the levels are already thought out ahead of time. Like the take profit, because I know they're going to be 40 and 40. If I need to manage early, that's fine. Okay, we're back in the green here, about 5 points in the green. Now again, my take profit is just below this little curl. So are there going to be a few stops here? Yeah. Is it a huge stop hunting mentality? Not really, but it could definitely add some liquidity to help push me down to 20,097, which is the take profit here on this trade. $10 points in the green. Sitting pretty much break even, a little in the green on the trade, a point or two. Yeah, take profit right now is down to 20,097. Stop up at 177. See if the bears can take us lower. Take out a few stops at that recent little curl low and push us to target. All right, we are 7 points, 5 points in the green. And volatility here is, what are we sitting at for ATR? ATR is at about 25, okay, which is kind of like my minimum region for, you know, my 40-point take profits, feeling comfortable there, not necessarily feeling the need to lean into negative reward to risk. So we're sitting fine. Gonna let this thing work for now. If I need to manage early, because ATR starts to fall, we'll talk about that, but let's just see how it works for now. 11 points in the money. $20 points in the green. Again, 20,100 is right ahead of my take profit at 97. That's a tier 3 level. I'm not concerned on that about that on its own. Bull's trying to wake us back up here. We're kind of retesting that the trend line itself a little bit. Kind of hanging up around there. 10 points in the money as we sit. 15 points in the money-ish. All right, there's a rollover. See that little doji? The bulls are stepping in and trying something. See if the bears can put that to rest. Currently sitting about 4 or 5 points in the green. I'm bouncing around 10 points in the money. Bulls trying to bounce it back, a few points in the green. Yeah, ATR is holding up about 23.5. Not too bad, but the range on these last 3 bars has been pretty tight. So a nice little break downside here, and a bit of a quicker move to get that volatility, light a fire under this thing, with a downside push out of the bears. It's kind of just what we need right now. Couple points in the money, 7 points in the money. Look at that push. Sitting like 5-8 points in the red now. Maybe a bit of a headline volatility there. Which, you know, I don't hate, because there's nothing worse than being in a trade and watching volatility die off. So a little bit of headline volatility. I haven't seen a headline come through yet, but is not necessarily a bad thing. Back to green on the trade. Neither side really showing too much backbone here. And pretty much break even here on the trade, little in the green. Bit of a bull push here. 15 points in the red. Okay, now ATR. Still creeping down slowly. We're at about 22. 22 and a half-ish. I really don't have much of a reason, at least yet, to do any early management here. So for me, I just gotta let it work. Just sit. You put the trade on for a reason, right? Sit. Manage early if you need to, if you have good reason to do so, and accept the outcome. 6 points in the green. 10 points in the green. There's quite a bit of a push there, huh? I think we're getting a few headlines coming through. I haven't seen anything, but we're getting a little bit of something causing some volatility. So we're now sitting about 20 points, 23 points in the red. Again, stop is at 20,177 here. Still no reason for me to manage early. Taking this early would be an emotional call here. Kind of fighting that 20 EMA on the 5. Gotta leave it on. Let it do what it does. Well, this is that original level. Let's clean things up a little bit here. You can make the argument, yeah, in the chat, that there's maybe a new little ascending support, though this is not a level I would trade off of because it's been bar after bar after bar after bar with no real, like, bounce, pullback formation. So, right now I just gotta let it sit. 23 points in the red. All right, pushing into the low 60s here. Bulls trying to take this thing higher. Now again, stop for me is at 20,177. So we're a little more than 20 points in the red as we currently sit right now. We'll see if the Bulls can take this higher, if the Bears end up punching it back down. My job right now is to sit and let it do its thing. All right, bit of a shrinking bull bar. So, you know, we are sitting in the red right now on this trade here. Shrinking bull bar, not a great performance on that bar out of the bulls, but they are pushing higher here. Chris says, I think the only logical conclusion is that the market makers stop hunted my 1 micro contract on a demo account. Makes sense to me. Well, there's a bit of a push down. So we're sitting right now about 17 points in the red. Bears are kind of trying to hold that 5-minute 20 EMA. We're currently testing that. Yeah, so I mean, you look here. It's making that test right now. Bulls are kind of struggling with it. Bears are trying to hold it. Let it do its thing. All right, ATR. What's ATR doing? ATR, of course, still falling. We're now at 22 approximately on ATR, which is the average range of a 2-minute bar based on the last 10 2-minute bars. All right, stop here is at 177. Bulls trying to take this thing higher. We've turned into a bit of a grind higher. But there has not been a bull continuation setup that I would put on if I were flat. Which means I can't be managing early. Hey, Jay, appreciate you, brother. All right. All right, we are currently 28 points in the red, 27 points in the red. Getting closer and closer to that stop at 177. We'll see if that hits us out. All right, this test of 170. All right, making a push here. Stop is at 177. So orders are set. Just let it play. Just gotta let it play out. And I gotta tell you, that first setup we took today, I like that setup. Was it as good as I forget which setup it was? That beauty we had a few trading days ago? No, but very few trades are going to be. I like that earlier setup today. Happened to be a loser. This setup here, nice little channel scalp put on. We're sitting in drawdown, still in the trade. But we're 27 points in the red on it. But I gotta tell you, I know a lot of people are like, I hate being red on Fridays. It doesn't happen too often. But when it does happen, as long as I traded well, it doesn't bother me over the weekend. I genuinely kind of forget about it. But if I trade poorly and I'm red, that bothers me. On any day, but especially on a Friday. All right, so we're back to 20 points in the red. Kind of retesting that 5-minute 20. All right, there's the rollover. Kind of battling 160 here. 20 points in the red. See if these bears can take this baby lower. $15 points, 17 points in the red. $7 points in the red, 5 points in the red. And average here is 137, so we're back to green on the trade, break even on the trade. There's a bit of a push. Couple points in the green. Rachel, pronounce her name. Wrench. Wrench Capital. Well, we're in the green on the trade here. Just gotta let it work. $13 points in the green. Target's down at 20,097. See if we can take out that little low. Again, I'm watching this here. All right, if we can take out that little low and push a few stops, maybe good for a 6-7 point move, which is not an unreasonable ask. Target at 20,097. I should give you some context here for the stream. That's how we sit. Those are the brackets. You can see we got very close to getting stopped. Let's see if we can get a nice little push through. Bull's trying to wick this baby right back up. Yeah, Chris, give him a call. See what he can do. About 15 points in the money here. Again, I'm really looking the stop hunting mentality here. This was thought of on the entry ahead of time. would really only need a 5-point push with some stops if we could take out this little swing low, which, you know, actually the fact that this push happened is not a bad thing for my trade. Now how we sit, because more stops have now accumulated here. Maybe that'll be enough to push me right into target. But we got to take that out first. Let's see if we can actually get a test down of 20,001. Trade is really taking its sweet time though, isn't it? Come on, Bears. These bulls are cutting into my lunch hour. I don't know. All right, bit of a push. All right, come on. Take out those little stop lows. Push me to target. And then I got a big old shake to drink. GL says, strawberry shake, extra whipped cream. No, that would be raw oats and whey. Doesn't taste good, but I've been drinking them for... God, how long? 10 years? Tastes good to me. Doesn't taste good, but it tastes good to me. Yeah, gains. I can only do isolate. I can't do concentrate. I think concentrate messes with everyone's stomach. All right, let's get a nice push through these stop lows. Give me a nice push down to target. We're 30 points in the money. Bit of a push. There we go, and we are out there at target. That was an interesting trade. Yes, it missed my stop by a few points, turned around and hit me out at target. So, okay, so we started, that was one of those trades, man. We started the day with a 1R loser, and that put us down like 3,500 bucks. So we're like, okay, that's fine. Let's move on, take another good setup. And we took that trade, almost stopped us out. Now, had that trade stopped us out, that would have put us down 2R, which for me, 2R right now is 7,000 bucks in the red. But that was a winner. So with slippage, commissions, we now sit break even, which happens to be 138 bucks in the red, to be fair. So we're 138 bucks in the red, which for me, again, is break even on the day. So I'll probably trade a little in the afternoon. I'm not sure yet, but right now, it's time for me to go drink a big old shake because I'm getting hungry. So Apex, currently 80% off. Make sure you use code BIG. You can pass in one single day, but if you're someone who's like, I don't want to wait 8 days for payouts. I want daily payouts. Take Profit Trader. Also the best deal always with code BIG, 30% off, and no activation fee, which means you don't have to pay like $130 or whatever it is to activate the account when you pass. You only pay the upfront fee, and then when you pass the test, there's no activation fee, which is the headline there. Same code, BIG. All right, guys. Hope you have a good rest of your Friday. Again, let the market come to you. At the end of the day, if you traded well, you should be proud of that over the weekend, whether you're green, flat, or red. Okay? Judge your performance. You'll get to the point. I know it's hard. I really do understand how difficult this is because the objective is to make money and provide for your family, right? But at the end of the day, if you did your job, which is you took good trades, you were disciplined and patient, you should feel good about that because you executed your edge, even if it didn't happen to work out with a tiny little sample size of 1, 2, 3, 5 trades today. And the fact that it's a Friday is completely arbitrary. So if you traded well today, if you traded your plan, I don't care. I don't care if you're red, break even, or green. Feel good about that. Have a good weekend. And I will see you all back here on Monday, 8:15 a.m. Central Time. If you haven't done so yet, please subscribe to the channel. And all right, guys, have a good one. Rest up. Do your job this weekend, which is not to be anxious about, I gotta get back to trading. Your job on the weekend is to rest up so you're fresh for next week because we got work to do. All right, guys, have a good one. I'll see you soon.